Have you ever successfully decoded the market's DNA using spectral and phasing analysis, only to realize you still didn't know exactly when to pull the trigger? Knowing a cycle exists is only half the battle. To a professional trader, discovery without an execution trigger is just a theoretical observation. Today, we are crossing the bridge from theory to profit. I'm going to show you the Future Line of Demarcation, or FLD. This is the ultimate tool that projects past prices into the future to create a dynamic barrier. When this barrier is crossed, it confirms a cycle turn with mathematical certainty. Let's dive into the blueprint that turns market rhythms into definitive trading signals. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. The mechanics and the FLD number. Before we plot it, we need to understand what the FLD actually is. It stands for the Future Line of Demarcation. Think of it as a mirror of your price action, shifted forward in time. Every wave in your cyclic model has its own FLD. To build it, we need the FLD number. The math is simple. Take the period of your wave, divide it by 2, add 1, and round to the nearest whole number. For example, if you are trading an 18.9-week cycle, 18.9 divided by 2 is 9.45. Add 1 to get 10.45. Round it up, and your FLD number is 11. This means we are shifting our price action 11 units into the future. By using the median price of each bar, we strip away the noise and reveal the true heartbeat of the cycle. Step-by-step plotting. Plotting the FLD is a straightforward process. First, identify your starting point at the most recent price bar on the far right. Count backward to the left until you reach your FLD number. Take the average price of that past bar and project it into the first empty space in the future. We place the midpoint from the day 11 to the next bar, then the midpoint from day 10 here. Continue this sequence. Move one bar forward in the past and plot it one space forward in the future. Connect these dots with a line. This line now acts as a definitive boundary. When the price is above the FLD, the cycle is rising. When it's below, it's falling. It's not a lagging indicator like a moving average. It's a frequency-specific barrier that respects the rhythm of the specific cycle you are trading. Now, if the math behind these shifts feels a bit fast, don't worry. I have mapped out the full step-by-step breakdown with high-resolution chart examples on my website. If you want to master this blueprint in greater detail, head over to tradingmarketcycles.com. It's the best way to ensure your calculations are frame-perfect before you take your next trade. Mirroring and midpoint signals. There are 3 critical characteristics of the FLD you need to memorize. First, mirroring. When the FLD shows a trough in the future, that is exactly when the actual price is expected to hit its peak. And conversely, when the FLD shows a peak in the future, that is exactly when the actual price is expected to hit its trough. Second, opposing directions. If the FLD is trending down in the future, your price wave should be trending up. And conversely, when the FLD is trending up in the future, the price wave should be trending down. Third, and most importantly, is the midpoint signal. When price crosses the FLD, it tells us that a cycle bottom occurred exactly 1/4 of a wave period ago. It also confirms that you are currently halfway to the ultimate peak of that cycle. This is how you stop chasing green candles and start entering trades exactly when the momentum shifts. Predicting price targets. The real power of the FLD lies in its ability to give you a goal. We call this the FLD Break. If prices break downward through the FLD, we look back half a cycle to find the highest peak. The distance from that high to the break point is our measuring stick. Simply withdraw that distance from the break price, and you have your estimated price objective. In this example, the S&P 500 crossed below his field at 6,800. The high was at 7202. 7202 minus 6,800 equal $202. We withdraw $202 from the 6,800 crossing point. This gives 6,598 as a potential downside target. If prices break upward through the FLD, we look back half a cycle to find the lowest trough. The distance from that low to the break point is our measuring stick. Simply add that distance to the break price, and you have your estimated price objective. In conclusion, the Future Line of Demarcation is the ultimate tool in the Hurst toolkit because it provides the one thing every trader craves: confirmation. We've moved from visual scans to data analysis, and finally to this interactive map. By mastering the FLD, you're no longer guessing, you are calculating. If you found this deep dive into cycle theory helpful, make sure to subscribe and hit the notification bell. In our next analysis, we'll combine these FLD signals with valid trend lines to add a second layer of scientific certainty to your strategy. Visit tradingmarketcycles.com for the full breakdown. I'll see you in the next cycle.